Welcome to Ticker Talk. I'm Ted Ohashi. I'm pleased to have with me David Morgan, founder of themorganreport.com. I think I can refer to David as a friend or an old friend now. David, nice to have you with me.
Great to be with you, Ted.
David, you're sort of one of the acknowledged gurus on silver markets. Tell us a little bit about your outlook for silver.
I'm still bullish on silver. In fact, my presentation here in Vancouver is about how much lies ahead. And of course, you know, history doesn't repeat exactly, but it tends to repeat somewhat. And what we saw in all markets, not just the silver market, take the tech wreck, for example. You saw a great deal of interest in the technology stocks. If you weren't buying a technology stock, you weren't really in the stock market. You had to have tech stocks, tech. And what you saw was a blow off top. In fact, at the top of the tech wreck, you saw, dogsandcats.com that had no business plan, no capital, but eyeballs are what mattered. And these things sold at ridiculous valuations that nobody that had any sanity at all would invest in. I'm not saying silver will get that overvalued, although it could. What I'm suggesting is that a great deal of money lies ahead. In fact, to quote Doug Casey, and I've said this myself, the easy money's been made, but the big money lies ahead. The problem with the big money is it usually happens in the last 6 months or so of the market. It becomes a feeding frenzy. All you hear on even the mainstream are gold, silver, gold, silver, gold, silver, and there's this mad rush, and that's the time where you should actually be thinking of taking profits rather than jumping on the bandwagon. But they're very, very emotional markets. So I see that ahead of us, Ted.
Right.
I see that as coming in the future. I don't think it's 2013. I think it's more like 2016, but I really can't say this market's over until I've witnessed that, and I'm almost certain we'll see that.
So you've got a statistic on that. I mean, what is it, 87% of the?
Well, I'll give credit where credit's due. It was Jeff Christian, who I know is probably more mainstream than I am, and Jeff says that 90% of the move comes in the last 10% of the time. Now, he hasn't said that for a long time, but I actually went back and did the math, which is just basic arithmetic. And what I found out was it was like 87.5% of the move came in the last 7% of the time. For factual evidence, silver in 1979 in January was $6 an ounce. In January 1980, it was above 48.
Yeah.
So that was an 8-fold increase in a year's time. Yet that bull market in silver was from 1965 to 1980, so roughly 15 years. So you do the arithmetic, you can do from what I just told you. So we had a huge increase. Now, is it going to repeat exactly? Probably not, but I want to give the idea more than the percentages. I want the idea to stick in people's minds that, wow, there is a big move. And again, it's not just silver that does this, it's the stock market that did it. It was the technology stocks that did this. It was Japanese real estate that did this. This is how markets move. They get in this buying panic, and people think they missed the boat unless they get on board that certain asset class. I think for gold and silver, it's going to go in the history books because it's going to be taking place at the same time that there's going to be currency wars going on a global basis, and people would rather have anything but a dollar. And so they're going to look for, a jar of peanut butter rather than a dollar. I'm being a bit facetious, but I think I'm making my point.
And I mean, the currency has been going down. They've been printing money like crazy. The U.S. and all countries have been borrowing money like mad. And I'm surprised that it hasn't been reflected more in commodity prices.
Well, there's two things going on to be a general overview. You have a contraction in credit, which is deflationary, and yet you still have printing of money madly, which is inflationary. So you've kind of got these counterbalancing forces, and my Austrian friends might want to hit me for making that statement, but that's the way I see it, and I call it as I see them. So there's a lot of money that's actually static, that's there, that's been printed, but sitting on the sidelines. Look at Apple's balance sheet as an example. I mean, if I could get, someone interested in investing in silver on the board of directors of Apple. But the point is that there's a lot of money that's sitting there that will, I think, eventually find its way into the silver market. I mean, it's such a small market, gold as well, relative to the general equity markets. So this is pent-up demand, I call it, that will find a home. And I think as the destruction, continues, there'll be more and more entities, such as fund managers, pension funds, individuals ad infinitum that are going to come into the market, and they're going to want one thing really. They want to preserve or capital gains. And that's primarily going to be in the commodity sector. And the top tier of the commodity sector has always been money, and that's gold and silver. So you've got the commodity sector that will benefit from that, and on top of that, you got the top cream of the cream at the top of the commodity sector. The two commodities you can buy and don't have to worry about storage really, or rotting, or weather conditions, or any of that stuff. When you buy gold and silver physically, you've got a commodity that's you can store for thousands of years if you want to.
And gold has always been more of an institutional, higher priced commodity, and silver has been sort of for the common man or for the retail market.
Yeah, it's true. I mean, I don't make excuses for silver. I mean, silver has been used as money more places, more often, many more transactions than gold for money. So it is the people's metal or the people's money, whereas gold is basically nation state to nation state. Remember when Franklin Roosevelt took us off the gold standard in '33, it's still what was internal. But externally, you could still take dollars and exchange them for gold. In fact, that's what caused Nixon to close the gold window, is de Gaulle said, hey, these dollars are as good as gold. I don't like these dollars. Give me the gold. And of course, we're seeing that happen now with Germany. They're saying, you've got our gold. We want it back. And I think the last I heard, it's going to take like 7 years to get their gold back. Are you kidding me? I mean, who's kidding who here?
Yeah.
You either have the gold or you don't.
Yeah, yeah. And just in closing, what about stocks? I mean, gold and silver stocks. They seem to have lagged everything.
They have. I'm very bullish on the stocks. I think because they're so unloved at this time. I use sentiment as one of my indicators. There's lots of indicators to use, but sentiment is a very good indicator of the psychology of the market, and really no one wants to own them now. And that's the time you really should. So yeah. I will leave it with that. I think if you do your homework, I would be very selective here still. I think the exploration side of the business you want to avoid for the most part. It's very hard to find funding. As I said, the credit contraction affects even the mining industry. And yet I want to contradict myself a little that when the feeding frenzy comes, let's say it's 2016, whoever's left standing in the junior market that is even an exploration company will probably be flying, because there's one thing that I know, and that's people love cheap stock. So once gold and silver really move, and let's say gold's above 2,000 and silver's above 50, people are going to say, oh my goodness, I could have bought it at 1/10 that price or 1/20 that price, but now I'm going to find a cheap gold stock and I'm going to make it up that way. So there'll be a lot of money that pours into the wrong sector, the right sector, but the wrong stocks. But you can't control people.
Right. Well, on that happy note, David, thank you for being with me today. From the offices of Investment Pitch in Vancouver, British Columbia, I'm Ted Ohashi.